As the private capital markets continue to open up to more and more people than at any other time in history, individual investors now have access to a broad range of private companies to invest in. Now, if you're the kind of person who wants to do your own due diligence and to pick and choose companies that suit your particular investment mandate, you can already do that on the VentureCrowd platform today. But if you're looking for a diversified portfolio of high quality private companies where the due diligence and assessment process has been done for you by a experienced group of angel investors, then we're thrilled to be able to offer you the opportunity to participate in the Sydney Angels Sidecar Fund number 3. For more information, jump onto the VentureCrowd website or stick around. I'm going to have a chat to Adrian Bunter, one of the investment committee and management committee members and my good friend from my PwC days. You've triggered the alarm at the Opera House.
In fact, I think there's the SWAT team coming in. That's a boat that can go much faster than that. Like, get out.
We'll just edit that bit out.
Sydney Angels Sidecar Fund 3 is a fund that co-invests alongside Sydney Angels. So in the event that a Sydney Angels syndicate forms around an opportunity and then invests in that opportunity, the Sidecar Fund will co-invest alongside that, so long as the investment committee is comfortable that an appropriate due diligence process has actually been followed. Sydney Angels is a membership-based organisation. We have about 100 members. We run 6 cycles a year where companies apply to raise capital. In each one of those cycles, they have anywhere between 40 and 70 companies apply and submit their applications. Those then get filtered down by a committee, a combination of the committee and some members, to what they think are the best 6 deals out of that cohort. Those top 6 deals then go and pitch at a deal screening meeting, which is made up of about 15 to 20 people. They then vote on those 6 deals to work out what they think are the best 3 deals. The best 3 deals then go and pitch to a full members meeting. At that members meeting, syndicates form based on their interest in those deals. So that syndicate is then made up of a group of people who've got a diverse skill base. So you'll have former entrepreneurs, you'll have people with legal and IP expertise, you've got finance people, you've got marketing people, you've got IT people. So that syndicate forms and you get a multiplication of minds and people actually working through problems. And they go through then a due diligence process, negotiate terms, understand the entrepreneur, understand the business, the opportunity, and then progress and ultimately make an investment or not in one of those companies. So I've always been super excited by that private small company taking on the large, that David versus Goliath battle. And I really get enthusiastic and interested in supporting companies to do that. The startups coming through are actually looking to innovate. They're actually looking to do things better, and people talk about doing things 10 times better and 10 times cheaper. So a small company, because it's coming off a very small base, can always grow much faster than the size of the economy and much faster than a large corporate can be, and actually add value to consumers. So in a tough economic environment, people are always looking to save money, do things better, do things cheaper, and startups are very, very well placed to actually do that. So I think that's one of the things that drives it. And I think people get bored with really large asset classes, with property. They know when they're investing in a startup, they're making a genuine difference on improving things. They're actually driving employment growth. So I think all these things sort of compound together that drive people to be interested in private markets and startups in particular. Steve, I think there's been some fantastic returns. So Sydney Angels has got quite a wide portfolio that's come through, about 90 companies so far to date, about $41 million invested. Clarity Pharmaceuticals is probably one of the standout companies in the portfolio. So from the original seed round investment when it came through Sydney Angels to the time of the IPO, at the IPO price, that was about a 50 times return for investors.
It's amazing.
It is amazing. What's actually more amazing is those investors who continue to hold on after that have seen the 50 times go actually into over 200 times return in that. So you've gone from a company at the very early stages to now be worth over a couple of $2 billion. Wow. An absolute market leader on the stock exchange. We've also had companies like Instacluster, which got sold in a transaction worth about $700 million to a US listed company. That company from seed round to the exit was about 40 times return on that initial investment. And there are multiple companies that have done multiples of returns from actual exits, but ones that are still continuing to grow. So you've got companies like Edrolo, which is sitting at 20 to 25 times return from original investment. Through to smaller ones like Ortra, which actually exited within about 2 years at about a 4 times return on investment. So a smaller multiple, but actually a really, really
still
high.
4 times return is.
It's still, I think it was a 93%. 93%
Yeah.
internal rate of return.
Yeah,
So
it's
again,
good.
pretty spectacular investment. You get sure beats the interest in the bank.
So one of the major benefits of the fund is actually its structure. It's structured as an early stage venture capital limited partnership. For those people who don't know why that is of benefit to investors, Adrian, talk us through it.
So an ESVCLP is really attractive to investors. It's got sort of probably two core key benefits. The first one is all the returns that you get out of it are tax-free. And who doesn't love tax-free returns? The second benefit is you actually get a 10% tax credit on all capital originally invested in it. So if you were to put $100,000 into it, once that $100,000 invested, you're going to get a $10,000 rebate on your tax bill. The $100,000 will grow. When you make a gain, tax-free as well.
Beautiful.
It is beautiful. One of the key benefits of Sidecar Fund 3 is that it also gets access to follow-on investments that come from earlier companies in the portfolio. So I talked about the opportunity to get diversification around timing, so you can also get some slightly more advanced opportunities that are potentially going to be faster towards exit. And there's a vision for Sydney Angels ultimately to back and continue to help Sydney and actually the east coast of Australia and all of Australia support and find new startups to actually grow. And we've backed startups from actually all around the country. Supposedly there's a report of people standing on steps on the Opera House.
You've triggered the alarm at the Opera House. I do love this.
That's a boat that can go much faster than that. Like, get out. The one hazard of filming outdoors in public areas.
I know, it feels like a good idea,
Yeah.
but up an entire portfolio is...
That kid wants to get into angel investing.
Sign him up, Adrian.
In fact, I think there's the SWAT team coming in. The old freshwater ferry.
Don't quite realise how efficient our transport system is until you have to